You are listening to chartingwealth.com for Wednesday, the 12th of August, 2015. This is our training and trends. The training today, we'll start with that. SPY. What is SPY? It's a Standard & Poor's 500. It's one of the three indexes that we look at along with gold. That is the total market, IYY, SPY, the S&P 500, and the Nasdaq 100 represented by the Qs. What do we see in the candles over the last 6 days? These candles that are on the screen, for those of you who are watching, those of you who are listening on audio, we're looking at 3 down candles. 2 are spinning tops, the other is a hammer. And what we see is down movement over the last 6 days, 3 two-day candles. What we have happening is we have drawn a nice trend line that connects those 3 candles, popping right along the top of them. Whenever we draw trend lines, people ask me what is the most valuable tool I would use in my arsenal if I could only have one. I would probably say, it would be a toss-up between the MACD, the moving average convergence divergence, which is represented on the bottom of our screen, and the trend line. Probably the easiest to make use of, though, is just the trend line. Because once you draw a good trend line and it starts moving and you can connect 3 candles to it, those are good things, and we can in fact look back at the nice upward trend motion that we had starting on the 13th of July, going up through the 15th, the 17th, on into the 21st, and then once the uptrend was broken by a red down candle, that trend was gone. Well, we have a nice, and you see the next move, once it was broken, the down move was gone, and now we have the down move starting again back on the 6th. We have 3 candles that have been connected. We have a crossover on the MACD going down that started actually today. The down movement today was about 8%, 0.90%, so almost a full 1% today in the Standard & Poor's 500. And if we drop back to our 4-hour chart, what do we see? We see a crossover going down as we moved into today. Now again, the 4-hour chart is a half day. So you have a morning candle and an afternoon candle. And what's really interesting with the way that we drew our trend line, the trend line was penetrated yesterday afternoon, actually in the morning to begin with, but strongly penetrated, but then moved back through going down on a down MACD on the 2-day chart. And what does that tell us? Well, that tells us that we've got a significant downward pressure, which means that the S&P is going down and should be going down for a good period of time. Now, the only caveat we always give to that, because cycles matter, months matter, where we are in the trading cycle matters. We are in the summertime trading zone. So what does that mean? Well, that means that the market typically has a lot less volume. Why? Sell in May and go away is an old adage in the stock market, where the big money gets out of the market after school ends and the kids start to go off on vacation and the parents want to vacate. So what ends up happening is a lot of that big money moves out to the side, and you let the younger traders sort of handle the market in the summertime doldrums. So we always give that caveat. There's a lot of people who don't trade at all in the summertime trading zone. So just be aware of that. Pay attention. If you have to trade, okay. Otherwise, best time of year to trade is in the fall-winter trading zone, where the moves tend to be cleaner, tend to be stronger. There tends to be more volume that pushes them on longer. So keep that in mind. What do we have set up on the SPY? Of course, a down move triggered by the crossover this morning on the MACD. So that is where SPY is right now. That's our training for the day. We've talked about that one. We always try to start with IYY. Let's talk about that. We're going to range back out to our, I did the 3-day chart, to the 2-day chart. Again, we've drawn a nice 3 candlestick pattern trend line, which is down. The MACD is crossed over going down in the last day or so. And we also see that our derivative oscillator is shown by light red lines that are moving down. I guess those are actually rectangles. those oscillator lines are moving down. Now, if we range back to our 4-hour chart, the half-day chart, what do we see? Same kind of pattern we saw in SPY. A lot of times SPY, the Standard & Poor's 500, since it represents 500 big stocks, and IYY look similar somewhat, little different. On this, the derivative oscillator is still going up on IYY, whereas it crossed over going down on the S&P 500. And again, remember, it's the total market is what IYY is. So basically the same pattern, confirmed down move, crossing over going down on the 11th on a down move on the 4-hour chart, while the big chart, the 2-day chart, was already in a confirmed down move. Let's range back out to the 2-hour chart and go to our last index, which is the Qs. We talked about that before, sometimes called the cubes. What is it? Well, it is the Nasdaq 100, the tech stocks. It also, 3 candles moving down, crossover on the 10th going into the 11th. Actually, the crossover occurred at about the same time derivative oscillator flipped over. That's always a strong indicator, particularly when it's on a big chart. We look at the 4-hour, the half-day chart. You can see that it's been in a confirmed down move already starting on the 6th. So now we have the big chart reflecting that. Once you saw it roll, once it went up and touched the 2-day trend line and then rolled off of it, that is your point for looking to pick it up. Sometime in the morning of the 11th would have been a good time to hop into a down play on the Qs. You might say, how does anyone, if you're a real novice trader or investor, and you wonder, how does anyone make any money on down moves? Well, you can buy a position, and again, we don't talk about buying real positions, we talk about buying virtual positions because we're not a stock calling service, we're an education company. We'd like to educate you and have you train yourself before you start making decisions on your own, but you can purchase something like a QID, which is an inverse of the Qs. It's a double inverse, which means it moves twice as fast typically as the Qs does in the opposite direction of the Qs. So when the Qs goes down, QID actually goes up. Isn't that neat? We'll put QID in here so you can actually see it. It's ProShares Ultra Short. We put that in, boom, look at what it did today. Well, it moved up. Isn't that amazing? No, it's not. It's an inverse fund. So, of course, it moved up. So people actually purchase QID. They also can buy puts on the Qs when you think the Qs is going down. Now, that starts to get into option trading. That's another thing that you can look into. But what you have to do first and foremost is once you learn to read the chart, you can get into all sorts of things. But you've got to learn to read the charts. Once you've gotten really good at reading the charts, you can, if you decide to do so, start going out and purchasing either inverse funds or puts when you know that the market is going down. Okay, that's where we are on the Qs. Let's range back out for our last chart, and that is going to be GLD or gold. Remember, this is that when we see that it's 106.28, actually gold ended the day at 106.26. Remember, you move that decimal point over 1 and it tells you what the price of gold itself is. This is a tenth of that. So if you move that decimal point over 1, it is $1,062.80, something like that. So what do we have happening? Sorry for the siren outside. I cannot control that. We have the Qs over the last couple of days. I'm sorry, not the Qs, gold, as we've talked about. We have called it reaching a bottom for many days now. Actually, it reached a bottom back, well, you could even say it reached the bottom back on the 23rd of July. It has continued to roam around that bottom. Slowly, the derivative oscillator started losing its speed. It is crossing over at about the same time it looks like gold is crossing over going up. Once that happens, we will have a confirmed up move in gold. We're not quite there yet. We're getting awfully close. Gold is getting so close to turning over on the MACD, but it's not quite there. We also see that it's pushing through the 34 and the 30 moving linear regression lines on the 2-day chart. We've started drawing a trend line over the last 4 days, and if we revert back to the 4-hour chart, what do we see going on there? Well, we see it crossed over back on the 27th, moving up. It actually moved sideways for a while, down for a while, back up a little bit, back down some more, and then started on its current trajectory. So that is where we are on gold. That is where we are on the total market, the Standard & Poor's 500, and the Nasdaq 100. Hope this has been helpful to you. We sure enjoy bringing this to you every day. We love to hear from you. Follow us on Facebook and Twitter, and we are also on Instagram. Thanks so much for joining us at chartingwealth.com. We wish you the best in your education, your training, and your success as an investor from chartingwealth.com.